Hi friends, good evening. Today I'm going to explain about accounting concept. Right? We have 9 accounting concept, and I will going to explain one by one. So what is the first accounting concept? Entity concept. We will call it as business entity concept. What is a business entity concept? A business entity concept explains it. Organization is very distinguished and separate from the personal. That means the person who is manage the business is different than the organization. What is that means? For example, I'm a owner of the business and I have taken certain cash to my personal expenses. But even though I am owner to the business, I need to pay back to the business. That is called a business entity is a distinguished from the person who will manage the business. Understand? The business is very distinguished and separate from the individual person who manage it. That is called a business entity concept or entity concept. We will call it as entity concept. That second one, going concern concept. A going concept assumes that the business will gonna continue for the longer period of time. That means the business will carry on over a period of time. It just assumption. It will not gonna end in certain period of time until unless there is an objective evidence to the accountant. That is called going concern concept. It will gonna continue for a longer period of time, right? That is called going concern concept. Accounting period concept, very interesting and important one. What is accounting period concept? So based on the going concern concept here, that means the business will not finalize the business rate on the basis on the certain time period. Will that stakeholders and shareholders of the business will deprive with the accounting information what they are looking at? To answer these all questions, to avoid these problems, accounting period concept is a very much important to the every business organization. Why? To establish the to give the result of the business on time intervals is called a accounting period concept, right? Yes, I have started business. So based on the concept assumption, I do not wait until my business is finalized. We don't know indefinite period. Based on the going concern concept, the business will continue for the longer period of time. But if I keep running my business without establishing my business details, how would I know how my stakeholders, my shareholders, my government, my people, my public of the company will know what is my business result. Why? Again, why the people stakeholder and the government or public should know about your company? Because they are the investor. The shareholders are the investor who invested money in the company. The public, the banks who has given the loan to the company, on what basis? On the goodwill, sorry, on what basis? The On the basis of the good name of the company, the on basis of the business is establishing the result on on a particular time interval is called accounting period. So based on that, the government or the shareholders, stakeholders, or public of the company will see the business result, what they are going to establish the result based on. It can be quarterly, half yearly, or yearly. That is a accounting period concept. Money measurement concept. Again, it is an interesting one. Any event which involves it which represent in terms of money is always recorded in the books of account. That means every transaction should measure with a money. That is called a money measurement concept. Next one, accrual concept. Accrual concept are very important in nowadays business, because the business is running, and nowadays on basis most of the business are running on the basis of accrual concept, right? What is the accrual? Expenses incurred to my business to run the day-to-day operations activities, but the expenses are not paid. That is called accrual. Vice versa. For example, my sales, my sales income is earned but not yet received. That is called accrual concept. With accrual is if the cash basis, it will directly impact to the owner's equity, and if it is the accrual basis, either it can be accrual can be no vice versa. It can be to the expenses or it can be the sales revenue as well. So, so basically, accrual concept is the expense in terms of expenses. The expenses incurred for the period, and it is not yet paid to the suppliers, or it can be any any expenses. The income is earned, but not yet received by the organization. That is called accrual concept. A dual aspect concept. What is a dual aspect concept? The all accounting entries that you are recording in the books of account is based on the dual aspect concept. Very very important. If you know the dual aspect concept properly based on accounting and golden rules, you will gonna write accounting journal entries very correctly. Let me explain with examples. Okay, dual aspect concept. When it talk about dual aspect concept, every business transaction have a two aspect. One is a debit, another is a credit aspect. That means I can show in terms of assets equal to liabilities plus owner's equity. Like asset is equal to liabilities plus owner's equity. How it is, I'll tell you. For example, Mr. A started a business worth of rupees 1 lakh, right? Sorry, 10 lakhs. 10 lakhs. Mr. X started business with rupees 10 lakhs. As per accounting and golden rules, how can you do the accounting? Analyze, identify, record, right? Two aspect. What are the two aspect in the transactions? Cash. Another one is capital. So cash is what is the nature of account? It is the nature of cash. The nature of cash is real account. I'm sorry. The nature of cash is asset. Asset comes under real account. As per real account rule, debit what comes in. So since cash is coming to the business, is a debit. Capital is nature of capital is a liability, and hence it is comes under real account again. So what is going out of business is a credit. So capital always credit. We need to pay back to the business owners, right? That is why it is a credit. Now see, when I talk about dual aspect, I said assets is equal to liabilities plus capital, owner's capital. That means my asset cash is 10 lakhs equal to, there is no liability, equal to, and then owner's equity. My capital is equal to 10 lakhs. That means my asset is equal to liability plus owner's equity. So 10 lakhs, 10 lakhs. Make sense? Yes. If I give another example with the same equations, for example, loan taken rupees, say for example, simple no simple amount 10,000. So when loan taken, what is the journal entry? Cash account data to loan account. So cash is again adding to this 10 lakhs, 10,000, 10 lakhs, 10,000, and my liability will add 10,000. That means 10,000 here it will add 10,000. So total assets is equal to total liability is owner's equity. That means my total assets is 10 lakh 10,000 and liability is 10,000. Owner's equity is 10 lakhs and hence total assets is equal to liabilities less owner's equity. Is it clear? Okay, good. Then let's talk about matching concept. Again, it's a very important and interesting one. Matching concept. Let me erase this one. I will gonna explain a matching concept. Okay, very interesting one. Please focus. Okay, what is the matching concept? Very important to the business organizations. For example, a business entity sale of goods of rupees 1 lakh. That means to earn a revenue of 1 lakh rupees by the business entity, what is the total expenses incurred to the particular month? For example, Jan 25 earned rupees earned of rupees 1 lakh. A business entity in Jan 25 earned a rupees of 1 lakh. To earn 1 lakh of revenue, what is my expenses, operating expenses, or total expenses incurred? An example, say for example, my expenses incurred, say for example, 50,000, right? 50,000 is expenses incurred. That means to earn the 1 lakh of revenue in January 2025, a business entity has incurred 50,000 of expenses to earn this much of revenue. That means the business should record both revenue and expenses in the books of account in the same accounting period. Is that clear? Yes. Okay, what will happen if you go if you do not recognize both expenses and revenue in the same accounting period? Okay, let's talk about in that aspect as well. So my sales is 1 lakh in the Jan 2025. If you don't recognize your total expenses what incurred in the books of account for the January 25, that means my profit will inflate to that extent, and vice versa. If you don't recognize the revenue, the what you have earned, and you only recognized the expenses what you incurred in the January month, that means it will deplete your profit. The fair view of the finance statement will not show, right? The financial statement, the financial position of the company, what they are established, the result by to that particular accounting period is incorrect, right? Understand? Okay, next, realization concept. Realization concept is again it is relating to revenue. What is the revenue amount that should be recorded in the books of account is called revenue realization. That is called a realization concept. This concept will help the business entity what is the amount that should be recorded in the books of accounts and records. For example, goods, an order received from the suppliers, an order received from the customer to sell the goods. On basis of order received from the customers, the company should not recognize the revenue in the books of accounts of the entity. But when it should be recorded in the books of account in the accounts for the revenue recognition, right? When goods supplied to the customers and the goods are received by the customer and he has billed for that particular goods, when then only the company should recognize the revenue in the books of accounts. This concept will help the business organization the amount of which revenue is unearned or unrealized to the particular period, which should not be recognized in the books of accounts, right? Then cost concept again, a very important concept in terms of among all the concept. And what is the cost concept mean the business should return down the all asset value to its cost. it should not be based on the market value. It should be based on the cost which are written down in the books of account. Let's talk about one example which will give you the clear understanding what is the concept of cost. For example, a business entity purchase a machinery of rupees 1 lakh, and to bring the machinery to the factory premises, or for example I have a business have in Bangalore, and it has a factory in Hyderabad, right? Hyderabad. He has purchased a machinery. He has a purchased machinery here, but to bring the machinery to the factory premises which is located in Hyderabad, some transportation cost will incur of 10,000. An example, imaginary example. Okay, okay. Transport 10,000. Installation cost. But here the machinery has to install, right, in a Hyderabad location. Here the factory where located in a Hyderabad location, the machinery should be installed. To which an additional expenses called installation cost will incur of rupees 20,000. The overall cost is the total aggregated cost here is 1 lakh 10,000, 1 lakh 30,000. This is a 1 lakh 30,000 should be recorded in the books of account. That is called cost concept. That means a transportation cost and installation cost should be a part of the total machinery cost. That is called cost concept. Understand? Yep. Good. Thank you so much for watching. Please do subscribe and share. Thank you very much. Bye.